Hi everyone, welcome to today's session where we're going to be looking at the different markets, starting with Forex. Sorry, we're all a bit discombobulated here. I hope you can hear me. Can you hear me, David? Oh, David can hear me, so I know you can hear me as well. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I'm just going to whiz through very quickly because I've had a quick look down the list of people who've taken the time out to come and join us for this session, and I actually see a lot of names that I don't recognize. I can see some of our Forex program students and some of our quantum users. So if this is your first time, very quickly, this is for you. As I said, we're going to be looking, this is a long session, but what we're going to do is it's then chopped up into maybe 3 or 4 videos, and it goes, the recordings go up on YouTube, and there are 3, I think it'd be 3 sections rather than 4, but there are 3 distinct elements. We're going to start with the Forex, which is what we're going to do now. Then we're going to stop for a few minutes, and we're going to just go and have a drink or something, and then we're going to come back and we're going to look more at indices and some commodities. Then we're going to have another 5-minute break, and then we're going to come back and we're going to focus on stocks. Now, you're more than welcome to stay for all 3 sessions. I know people are joining us at different times, but we've done it this way because the methodology that we use to explain what is going on the charts of volume price analysis, you can apply it to whatever you trade and whatever time frame you trade. But as you can appreciate, it's very difficult to talk very broadly, for any length of time. So that's why we've chunked it up into these very specific markets. Having said that, even if you are just a Forex trader, it helps to know what is going on in the other markets, because currencies move for all sorts of different reasons. They move because of sentiment. There are lots of drivers for currencies and currency pairs, and sometimes that driver does come from what we call a related market. So as part of what we teach, what David and I teach, is on the technical analysis side is volume price analysis, which is this very intimate relationship between price action and volume. But at the same time, it's then expanded to include, as I said, the other factors that will drive the currencies and currency pairs. That's obviously the fundamental news, the news releases, of which this morning has been very, very important, because we've had the RBA, and we're going to look at what's happened as a consequence of what Governor Lowe has been saying. And then we have a third element, which is what we call the related markets. And as I said, so even if you just trade or interested in trading Forex, I think you will find that there's always something to learn by understanding what is going on in the broader markets and in the other capital markets. And it works both ways. So even if you are a stock trader, it does help if you know what is going on in the bond market, what are the commodities doing, and also what's the Forex market doing, because often certain stocks are very sensitive to the exchange rate, and particularly here in the UK with the FTSE, because the constituents that make up an index, maybe if they they derive most of their earnings abroad, or particularly if an index is backloaded with stocks that are in the commodity space, such as the oil space at the moment, that is going to make a difference as to whether that index is going to be sort of moving up or just basically going nowhere. But a lot of the concepts we talk about, as I said, are all contained in the books that are up on Amazon. This is what we've put together for Forex, but there are also books for examples of what happens with indices and stocks. So, as I said, volume price analysis. I know most of you have seen this before. I said volume and price. It's a kind of methodology. We use candles and candle patterns, and you'll be able to see them on the charts as well. And this element here, the 5th element, which is the support and resistance. And again, it's easier. You know, it is so crucial, support and resistance, for all sorts of different reasons, for stop placement, for potential price objective, price targets, for entries, for exits. I mean, you could go on and on and on. Support and resistance is really going to help you not only, you know, manage your trade, but also, you know, help you with your in terms of deciding what is the risk on the trade itself. And we'll talk about that when we actually see that on an example of a chart. And on top of that, on the charts, you can then add whatever indicators you want. You've got the indicators that come with your platform. We have our own. We've developed our own proprietary indicators, and everything is overarched with time. And we're going to look at time in multiple time frames. I'm also going to look at going to be looking at 3 charts today. Those of you who come along know that I've got 5. David has got a different combination of time frames with his platforms, but I have a lot of emails from people who say, well, you know, I've only been using 1 chart. I'm really having difficulty, you know, move, you know, maybe 2, maybe 3 is my maximum. So what I've done is I've done a little thing where I'm going to explain how you can use the hour, the 5-minute, and the Renko, because I'm just focusing on MT4, the MT4 platform, because it's, you know, one of the easiest platforms to learn. So time, as I said, multiple time frames, and also looking at the actual time frame that you are trading. And the indicators, as I said, we've developed our own, really to support the VPA method. But for Forex in particular, we've got these very particular ones, and that is because Forex is all about flow. It's about the flow of money into an individual currency. You know, this Forex market is there for a purpose. It's there to, it lubricates all the other markets. It's the medium of exchange. So, you know, banks and trading desks and you know, large corporations have a need for currency, so they will have to buy a British pound or a euro or an Aussie dollar, or you know, whatever their requirement is, it is at any given time. So that is the first step. So you start with the flows that are going into. So what is the market buying at this particular moment? Is it buying lots of Aussie? Is it buying lots of Kiwi? Is it buying Euro? What's it selling? So that's why we have the currency strength indicator. So really, it's a strength indicator, but as in a way, it's a flow indicator. And then obviously we have to look at, well, where's that flow? You know, in what pairs? Because the way the business works at the institutional end is, you know, I was talking to one of our traders who used to do this. It was a market maker years ago in the city of London. And he said, you know, if he was given an instruction to go and he needed to buy some, back in the day, some German Deutschmark, you know, how would he acquire them? He may have been given some to sell. It's not a straightforward transaction. So what I'm saying is you may have to buy some euros, as it were. Well, are you going to buy them against the dollar? Are you going to buy them against the Aussie? Are you going to buy them against the Canadian? You know, it's they have all these options. And the route to getting the euros at the price that they want to get them is not the route that you may think it is. I'm hoping he may come and do a webinar for us and explain how this thinking, this multi-level thinking goes on in the institutions to get, you know, getting from A to B is not a direct route. It's kind of quite a zigzag route. I think we had an example somewhere, David, wasn't it? Someone needed to do an exchange on dollar South African rand, but it couldn't be done directly. Anyway, I'm not going to go on about it anymore because it's just to explain. We start with the individual flows, then we look at where those flows are going into most strongly into the different pairs, which is why we've got the matrix here. The currency array is an interesting indicator because it's more of a strength of trend, and we use it in the way to see whether, you know, the trend is still going or we're looking at an overbought or oversold. And we've got the currency heat map, which is really looking at everything in multiple, going back to time, in multiple time frames. And we are very bad, I do accept. We need to feature the currency heat map much more, because you can actually use it in 2 ways. You can use it on an intraday basis to monitor, because trying to look at how many time frames we've got up here, it's almost impossible. More than 3, maybe 5 charts, but this gives you a very broad picture. Or you can use it on a medium to longer term and really look at the overextension. What's being bought, what's being sold, is it time for a reversal? And often these longer term reversals are also linked to what is happening maybe on the fundamental side. That's the macroeconomic side, as it were. And lastly, we now have put together a program, a funded program, because we appreciate, coming into this business, like any other business, you have to start with something. You have to have, a bit of capital to get you going. And, but there's no guarantee there's no guarantee in any business, in any endeavor, that you are going to succeed to the level that you want to succeed. So what we've done is we've put together this program, and it's only open to the if you go through the complete Forex program. There is a cost, there's a one-off cost of entry. Then you will get the opportunity to have an account. You can opt at the evaluation stage for 5, 10 or 15,000 account. It's not your money, it's our money, and you trade it. And you can, if you can work through the different levels right up to managing an account of 2 million. David will explain that in a little bit more detail as we go along. Right, as I said, I have got MT4. Very, very quickly, just whiz round what's been going on today. Let's have a look, just pull it over, because it's been a really interesting session so far. No, that's the wrong one here. I need my Firefox one. Here we are. Because those of you who come along will know that I have 3 economic calendars going. It reminds me when David and I traveled to Italy, when maybe not sure this year, we drive to Italy. We have one sat nav, we have another, and we have 2 sat nav, but I always have a map as well, because we have been caught out so many times by blindly following the sat nav, and we've gone completely. I'll never forget the one where it took us through Paris. I was absolutely spitting blood. Those of you who've driven through, tried to drive through Paris through the periphery will know exactly what I mean. Anyway, so Forex Factory, as we know, we've had this RBA rate statement, and we've also had the cash rate, which has stayed as it is. And if you are an Aussie trader, or you've looked at your charts this morning, you think, it was a very dovish, what's called a dovish release, in the sense, well, interest rates aren't going anywhere. And then suddenly it did sell off, but boy, oh boy, the Aussie has been in an incredible upward trajectory, as we can see, as I said earlier, as Oz, we can see of the flows. And it's one of these situations where you didn't get a contradiction. It was right. Interest rates are not going anywhere, he says, until 2023, maybe 2024. So the market's fine, will sell the Aussie. And then suddenly there's a complete about face. As soon as he started to speak, it went the other way. And that is because if you actually read into what he was saying, it's about QE. They're talking about tapering. Australia has been blessed with, I think this is the first time they've been in a recession for, I don't know how many years. They've really weathered the economic storms that we've had over the last 10 years or so very, very well. But even they have gone into QE, issuing bonds, etc., as what the Fed does and all the other central banks. But they're talking about tapering, and as soon as the market hears about tapering, that's it. It's more hawkish, so the currency is bought. So you've got this kind of bit of a paradox in what happened this morning. It was all very dovish in the sense that interest rates aren't going to go up, but as soon as he started talking about QE. Now the thing about the Australians and the RBA is, of the banks, they do actually produce very clear documents, very clear explanations. They're very transparent bank, and it brings us back to one of the things we always say with Forex, with any instrument that you are wanting to trade or invest in. You really have to get to know the background to it. You have to know who are who are the personalities, if you like, that may, that are going to drive that instrument either higher or lower. What are the characteristics of that instrument? And one of the things you have to do as a Forex trader, you kind of got to get to read what the central bankers say. Now, some of them can be very impenetrable, and you think, what the hell are they talking about? I'm not an economist. You may have, but then you find someone who can interpret that for you. But you gradually do get a feel for what they say, what they mean, and what is going to move the market. And that was a really classic example this morning with the RBA. So then we go off to my little chum Anime over at Financial Juice, which is great. So we've had the ZEW. What's happened there? Well, that came in, the economic sentiment, that came in way under, but the current condition came in much better. Then we've got retail sales. You'll find Financial Juice is probably more comprehensive. It will bring in a lot of things like the auctions for treasuries as well, that you don't necessarily see in Forex Factory. And my last calendar, which is probably the most comprehensive of all, is this one from Trading Economics, which you actually make yourself. You filter yourself. You can choose the countries that you want to see, and those are every single country you can see. You really wouldn't want that on your calendar, so you can either filter it to you can reduce it if you're only ever going to trade maybe, I don't know, 3 or 4 pairs, then you just tailor it to what you want, and it is very good. And what you have is the items of news that are significant. They're in bold, as it were. So, for example, this retail sales here, they give it a high impact effect, if you like. Whereas if you look at Forex Factory, if you look at the retail sales, it's given a very low impact effect. So, and also it does actually also have some nice charts here. You can see whether it's, there's a trend. You read fundamental data as a trend. And the last thing I'm going to say about fundamental data is this. The particulars, we had the NFP on Friday, and we haven't had a chance to catch up on the NFP, and everybody looks at the headline numbers, and no one can ever say, well, the number comes in sort of reasonably good, and the market goes down, and it doesn't seem to behave in good news market up, bad news market down. And the first thing you have to understand is how that expectation number is actually achieved. And so if you like, the number that is given on the economic calendar, say for the NFP, it's collated from all sorts of different sources. I think it's economists and various sources. But I will quote this to you. When David and I were in the computer business many years ago, and we worked for companies that weren't IBM. It was very difficult to get new business, because it was always, the saying was, no one ever got fired for buying IBM. So when an economist is asked for his opinion about, what do you think the number is going to be this time around, they're never going to actually give what they really think, because their job might depend on it. So if there's 20 economists who are asked for their opinion on NFP, you will find generally their consensus is like the distribution curve. They're going to be sitting in the middle. It's called herding. It's the herding effect, as it were. So you've got to be aware of that. So when the market will react strongly if it's wildly at either end of that distribution curve. So last Friday, it was kind of, what the market expected. Plus, it was before the holiday. Markets don't like, certainly in the States, they don't like ending on a down note before such an important holiday like the 4th of July. So it's stuff you just have to be aware of, when these important news releases come around. Right. The other interesting fact this morning is, it's clear what we can see here. The dollar, there's been some dollar buying, there's some yen buying. The Swiss franc is still selling off, but it looks like that's going to turn up. That is from a sentiment perspective. Is telling us that, well, we'll have a look at the indices in more detail later on, and general market sentiment, but it's all a bit you know, yeah, it's good, but it's all a bit fragile. And sometimes sentiment comes through in Forex much sooner than it does in the other markets. But these are the ones that really catch your eye. There's been this tremendous strong sell in the Kiwi. And the Kiwi, you say, well, why has the Kiwi gone up? Well, it does tend to follow the Aussie. So if the Aussie, you know, there is the expectation that the RBNZ is probably going to do what the RBA has done as well. Interestingly, how has that translated to our pairs? And the first thing you notice about the matrix is a ranking indicator, is where are the majors? You know, where are the dollar pairs? Because vast majority of Forex traders trade the majors, because that's where, you know, the euro dollar, dollar yen, that is where the biggest, you know, the deepest liquidity is. But today, if you look, it's all been the cross pairs, and it's been the cross pairs because we've had this huge influx into, as I said, the two commodity countries, the commodity currencies. The commodity currencies will respond to sentiment. Those of you on the program will know that as well, but they also respond to their own local fundamental data, which today was, as I said, from the RBA. So that's that. I'm going to pass over to David, and then we're going to come back, because what I've got here is I have got the, we're going to look at levels, because obviously the question is it actually going to, are we going to get a reversal? This is the daily chart for the Euro Aussie, and the Pound Aussie is exactly the same. This is massive down bar, but most of that move has clearly already happened, and we will now be looking at the North American session. We've got the Euro down at the bottom, so, you know, looking to buy you know, the reversal in the Euro. We can see the CSI I've got at the bottom of this hourly chart here. You've got the Aussie, and they're very overextended. But because we've already had this massive move lower, is it actually going to go lower? Well, you know, anything can happen. Things can stay overextended for a lot longer than you and I can stay solvent. But it may be that the reversals that we are going to get in the Aussie and the Euro may not happen in the Euro Aussie at all. This is what we call this rotation. So we know what's happened from the CSI, but moving forward now, and with with North America coming along on board, maybe we should be looking for a good reversal for these currencies in another pair. Maybe this is where the majors actually come into their own, as it were. Now, as I said, that big down bar from today, that is where it is. This is this section of, this is this bit of price action that we have on this hourly chart. This is the candle with the RBA, as I said, went down, up, and then back down again. And this is where your levels come into play. Now, this is the hourly chart. This is the price levels based on the Camarilla. And the third level, the R3 and the S3, these are the most important. And those of you who have these indicators, well, what I suggest you do, because it's something I'm doing at the moment, if you want to move away from the faster charts, and that is move to the hourly and look at what happens at the beginning of the week. Where is the price action? Is it near the R3 or the S3? Because I think you will find as the week goes forward, there's an awful lot that you can, I wouldn't say you can almost, you know, set your clock by it, but you will find some very interesting moves for staying in for two or three days based on those levels. That once they break through the R3 or the S3 in this case, you will find the move will continue. But the sale in the Euro Aussie actually goes back to actually instigated last Friday. These levels are recalculated every week. So this is this week's level. This would have been something completely different on Friday, but there was quite a strong sell-off on Friday. We've got lots of congestion, but then the market was, because of the 4th of July. Then we had as I said, the break low. It's actually from the S1, but you could wait until the S3 and carry on. So it's just something to think of if you want to get away from the shorter time frames. Right, I'm going to go, as I said, to these 3 time frames, not on the Euro Aussie. I'm going to be on another pair. So let me pass over to David.
Hi everybody, hopefully you can hear me. Hopefully you can see my screen. And I can, and I'm hoping you can hear me because I've actually managed to switch my microphone on, which is a minor miracle because often I forget. I'm going to whiz through this, so I'm not hanging about. Just start with the multiple currency strength indicators. I've got the 1 minute, the 5 minute, the 10 minute, and the 15 minute. And as Anna said, these are setting up for some nice reversals. Some have already taken place. The Swiss franc here, the green line, this is rising really fast. Here on 1 is already got up into overbought, rising really sharply on the 5 minute, rising sharply on 10, and beginning to rise sharply on 15 as well. Then it's a question of matching that with the currency that you think is going to perform best for you on that particular trade. So you're looking at either perhaps the dollar, maybe the yen, or maybe one of the commodity currencies. And the point, as always, if you're going to trade reversals, and I know a lot of you come along regularly, you'll know what I'm going to say. I trade them all the time because I like to get into trends early. I don't particularly enjoy jumping into a trend once it's underway. But it comes at a price. If you're going to trade reversals, then you've got to put on wider stop losses. Now, I think someone asked in the VPA chat room the other day, you know, how wide do you set your stop loss? And the answer I gave was really based along, there are so many different factors. First of all, you're looking at the chart because this is the starting point. The currency strength indicator is the starting point for identifying opportunities, for guiding you to the chart, to guiding you towards timeframes that you might consider for a particular trading opportunity. But there are many different factors. First of all, you look at the chart, and as Anna said, levels are key. You're looking at levels, you know, and you're looking at VPA. You're looking at it and think, okay, we've got to this particular state of play on this particular time horizon. Is it looking like a reversal? Are we seeing strong buying coming in? Are we seeing strong selling coming in? Have we got some resistance above? Have we got a VPOC somewhere in a different time frame? So you're constantly looking at the chart in that context, trying to define where you might set your stop loss from that particular perspective. But there are many others because whatever currency pair you're going to trade, then each has, and it's something we explain in the Forex program about the volatility index. Obviously, every pair has a different characteristic. It has a character of its own, a profile of its own. Some are more volatile than others. Now, if you're trading a pound yen, for example, and you're looking for a reversal trade on that, then the stop loss you're going to place on that particular position is going to be wider by definition because you're on a volatile pair than if you were trading an Aussie dollar, for example, which is far less volatile. So that is also has to be a factor that you build into the equation. So there's no hard and fast rules. You cannot, and part of it is instinct as well, gut instinct. Once you start doing this regularly, and you just set it according to your money management rules. But the basic premise is that if you're going to trade off reversals, your stop loss has to be much wider, purely because you've got to allow for this buffering all the time. There is no guarantee that this will go straight down here. It may be up here for a while, the Aussie. All you can be sure of is that at some point it will move from overbought as it's starting to creep here back to oversold. You can see the Swiss franc here is already rolling over. It's gone right up into overbought and starting to roll down again. That's all you can be certain of, that at some point the currency will move, because that is the nature of this business. This business is a market of mean reversion, and by that, all it means is that these currencies, the flow of these currencies is constantly from overbought to oversold to overbought to oversold in all time frames. That's the nature of the Forex world. All you have to do, it's about timing, and in waiting for a reversal to develop, you have to allow for that time to pass by creating the stop loss further than you would do if you're jumping onto an existing trend. If you're jumping onto an existing trend like this one here, for example, you've got the dollar falling and the Swiss rising, the dollar Swiss. If you're jumping on that right now, you know, that's a trend that's underway. You've had a cross. The two currencies are moving nicely, nice trend up, nice trend down on the two of them, the two currencies individually, and therefore you can be assured there is a trend, there's a strong trend, but of course you've already missed all this section of it. That's already gone. But in jumping on that trend right now, your stop loss can be much wider, much closer to the position because the train has already left the station, it's underway, you're jumping on a moving train, and therefore your stop loss can be that much wider, that much closer rather. So do bear that in mind. Consider the pairs you're trading if you're looking at reversals. And positioning of stop loss is an art, it's not a science, and it's based a lot on the chart, and certainly in terms of the currency pair that you're trading as well. Before I hop over, I just want to hop over onto cable, but before I do that, I just want to pull this over because this kind of carries on the same theme. This is on TradingView. I've got 3 platforms running. I've got NinjaTrader, I've got TradeStation down the bottom here, and I've got TradingView here. Now, this is on TradingView, and the reason I want to show you this is really this exciting new indicator that has literally gone live this morning. The development team put it up this morning. It's on the site. If you have the full package of TradingView indicators, you should find this in your to be available to you. If it's not, drop us a line, helpdesk@quantumtrading.com, but give us a day because we are doing it literally as I'm talking to you. The guys have been adding on to all the customers who have the full package, so you'll get this automatically. It's what we've always done over the years. If you invest in a full package with us, you get all new indicators free of charge. It's as simple as that. Let's get rid of that. Nice for oil. Come on to oil in the later session. The reason I wanted to show it to you is because it has similarities to the CSI. This is the currency strength indicator on the left, which I've just shown you on which platform was on NinjaTrader. This is on TradingView. It works in exactly the same way. This is on the 5-minute. This is the cryptocurrency strength indicator. And from a principles point of view, which is the point I wanted to make, it works in exactly the same way. The difference is that on this, on the cryptocurrency side, we are looking at the cryptocurrency in total. So this is Ethereum, and the orange line, which is just under here, is Bitcoin. So that is the cryptocurrency, whereas these are the individual currencies which we've broken out into the Aussie, New Zealand, so on and so forth. Here we are looking at the cryptocurrency itself, but the cryptocurrency is quoted against the dollar. And what we've isolated out here is Tether, which is the US dollar equivalent in cryptocurrency land in that market. And so it is based against the dollar, the USDT, which is Tether, which is the red line. So what we have is exactly the same principles where these are moving up into overbought. The Tether equivalent is moving down into oversold. And we are looking at reversal opportunities, and we are looking at trend trading opportunities. The other significant difference with the cryptocurrency market is that generally speaking, as you can see here, the cryptocurrencies will move en masse. Now you can think of this in exactly the same way as we talk about it on the currency matrix, for example, where what we're looking at on the matrix when we're looking in the Forex world is we are looking for the universal sentiment of flow. If we're trading a dollar or we're trading an Aussie, we want to make sure that the market per se is all buying or selling whatever direction. If we're buying Aussie, we want to be assured that the market per se is buying the Aussie across the complex, across the other 6 currency pairs. And that's part of what the matrix is about. So when all those currency pairs, those Aussie currency pairs are stacked up either top or bottom, then we know for a fact that the market per se is buying or selling the Aussie. And there's no divergence. Now, occasionally, as you've seen, I'm sure many times on Forex in the matrix, you'll see divergence. You'll see one currency pair in the matrix moving in one direction, while some are moving in the opposite direction, which is fine. That's down to local politics or a piece of news or whatever it may be, absolutely fine. The difference with the cryptocurrency market is that generally speaking, all the cryptocurrencies will move en masse together. There may be some slight divergence if you're down on the 1 minute, 2 minute, 3 minute, whatever. But generally speaking, this is what happens. This is what it looks like, which actually gives you a huge amount of confidence. If you're trading Bitcoin and you know that all the other cryptocurrency pairs are moving in the same direction, it's a great confidence boost. And this is how it looks on the chart. This is on 20 minutes. Fantastic move, come off the overbought, really strong move lower, and that is counterbalanced by an equally strong rise in Tether. So you've got a perfect trade. Are you going to get on the overbought and oversold state at this point and be patient and wait, or are you going to jump on the moving train as Tether gets underway and this move gets underway down here? So I just wanted to show you that. As I say, it's up on the site. It is available for sale. If you have the full package, you'll get it free of charge. You'll be included with all the other indicators that you have. So you will find it there. Just see what's going on. Okay, the Swiss franc is still rising strongly. Very strong move on the Swiss franc. Dollar's kind of rolling over. Oz is still set up. It's just starting to move off the top here. This is what I mean. You've got to be patient. You've got to wait. It's just starting to move down here. And this is why using multiple timeframes is so important. You're down here. The first thing happens on any time frame is your fastest. Then it moves into the next one. Then it comes across into the next one. Finally out to the next one. And if this is going to be a genuine move, you'll start to see it move here, and you'll start to see, for example, on the Swiss franc, this rising as well, which it is already doing so off the oversold. Right, let me just pull up very quickly the, I just want to show you something on cable. This is cable. Good strong move this morning. This was something else that came up actually in the VPA room, which is about trading breakaways. And at what point do you jump in, and how do you define your entries? And trading a breakaway like this is all to do with patience. You have to be patient. If you can't be patient, then don't trade breakouts. It's as simple as that. The beauty of trading this, if you have the patience to trade a breakout, there are several really clean elements to them. And perhaps the strongest of all is that you get these very clearly defined levels. This is around the VPOC, which is no great surprise. Obviously, congestion tends to center around the VPOC anyway. Once we go into congestion, the volume will start to build. Heaviest volume goes right the way out here. Long congestion period. Then we're looking at the various levels. We've got a decent level on the accumulation distribution up here, not terribly strong. We had this one here as well. Then we've got the VPOC, and then we've got a level down here below. As you can see, it was tested here, held on that occasion, and then it came down here as well. Now that may be enough for you to define your levels and say, okay, this is the channel we're moving in. Just move the chat box out of the way. We're up here at, where are we? 38.95, and our floor is down here at 75. So it's roughly a 20 pip a channel that we're trading in. You then obviously look at the volume as the breakaway starts. Is this genuine volume? Is it a fake? Is the move away fake, or is it on good, strong volume? The other aspect you're looking at is the volume profile here on the VPOC, because when the price action starts to break down and you've got this low volume region down here, you expect the market to move through there pretty rapidly, because there's nothing in the way of a volume to cause it to act as a platform of support. So the price just moves through there pretty swiftly. And that's the beauty of the VPOC. Not is it just about defining where the fulcrum of the market is. It is also about this key aspect of the volume profile and how it will help you as the market unfolds and starts to move away and into these regions. Because if you're coming into a low volume area like that, as a trader, you expect the market to move through there pretty swiftly, because there's nothing in the way that's going to cause the market to pause. It's exactly the same way as you use support and resistance, price-based support and resistance. Here we're using it in terms of volume. Down we go, good strong volume. Then we start to see some buying coming in. And then we come out the other side, and you're looking at these sorts of candles, all of these sorts of candles, the volumes. But what you're also seeing with this, which is the attenuation in volume, it's one of the things you're looking at the whole time. The volume is high as we start to break away, looks fine. We go into congestion, we roll over again, we're down into high volume again. But look at the volume. The actual selling volume is draining away. It's falling across that particular time horizon. Then we start to get a little bit of buying coming in, a little bit more buying coming in here. It doesn't look particularly strong. We have an effort to rally here. Look at this candle here. Now we're trying to rally, lots of volume going in, etc., etc. So it's the other beauty, of course, with trading a breakout like this and a breakaway is that it's very easy to define where you are going to put your stop loss. If your risk and money management rules allow it, then clearly the best place to put it is up here, because you've got a whole wedge of stuff to get through if the price is going to reverse against you. If that's too far away, then probably the next level you might look at is above this level here in terms of the accumulation distribution. So you've got a decent protection level there. And of course, below that, you've got the VPOC as well, acting as resistance too in case of any pullback. You see here, it did actually try and pull back. But for the market to move through and reverse strongly against that is really going to take some strong volume, which you just don't see. So you start to break away, you get a bit of a pause point here, then we get decent volume under here, then we get higher volume coming in here, and then we get down into this congestion phase. Market's trying to rally, volume's falling away a little bit here, so it doesn't look particularly strong. Trying to rally, and what you're looking for constantly is the wicks. You've got lower wicks here, so we're expecting a little bit of buying here because we've got 3 candles with the wicks. Market tries to rally, falls back on decent volume. The volume falls away on the next one, so it hardly looks strong. Then we come along to the next 2, but the volume's falling away. Nevertheless, it still looks a little bit weak, maybe a little bit more buying coming in there. Doesn't really rally, then it's looking weak again, wick to the upper body, wick to the upper body again, and then down we go into these 2 candles here at the bottom and a narrowing of the spreads. And finally, we get this candle at the bottom here, which has got really quite lightweight volume. And what you're looking at in the context of this candle is really how it equates to others of a similar size. Now, if you look right back up at the top here, this candle here, I know it's got a little wick to the lower body. This one's got a tiny wick, but in terms of comparison, it's more or less the same size. Maybe this one is perhaps closer to it, but generally speaking, you're looking at these 2 candles and saying, well, I had high volume up here or decent volume under these 2, and now under this candle, this volume seems to be falling away. So in the context of a comparison where you are constantly using candles as benchmarks for one another to try and get a feel for, is this not so much anomalous, but am I seeing a deterioration, a diminution in terms of selling or buying? And that's certainly the case here because we've got similar sort of price action, but the volume here is much less than it was higher up in this particular price waterfall. So it gives you a heads up, if nothing else, not necessarily that the market is going to just reverse and we're going to have a nice V-shaped rally all the way back up to the volume point of control again, but at the very least that if you're in that position, then it's potentially a point at which you might consider getting out or at least closing part of position. If you're running multiple contracts and you're scaling out, then take most of them off the table at this point and maybe leave 1 or 2 to run however you work. If you've only got 1 contract, then at that point maybe it's time to take it off the table and just see what pans out. And of course, I'm only looking at this in terms of 1 chart. The trend monitor down here, it's a fantastic indicator. It just keeps you in through this stuff. When the market goes into these congestion pages, if you get in early up here, then you get this, you start to worry and fret and think, oh, do I close out? Should I take the position? Do I part close? What do I do? The trend monitor is designed to help you to stay in. That's the one objective for this indicator. It's trying to give you the confidence to stay in through these horrible phases of price action when uncertainty starts to creep into your mind and you start to make knee-jerk reaction decisions when you have to be patient. That is one of the beauties of VPA as well. VPA keeps your mind logical. You make logical, common sense decisions based on logic, not on emotion. So that's where we are at the moment in terms of the cable, and that I just wanted to show you that because it's a classic example of breakaway, managing the trade, VPA, the indicators and everything else. You can see, I mean, we go up onto 15 second, a scalping trader, plenty of opportunities up here. What have we got? Volatility trigger. What do we expect? Congestion reversal. It's exactly what we're getting. But that's on 15 second. That may be enough for some people. I suggest that, on cable, it probably wouldn't be. It might be on euro dollar, handful of pips maybe. But the principles are exactly the same. If this is going to reverse into a move higher, if the pound is going to lift off the bottom here and the dollar is going to start selling off more strongly, then what you will see ultimately is the trend monitor starts to transition through. It's already started on to gain traction on 1. Over on 3, it's in a phase where it's uncertainty at the moment, so it hasn't transitioned fully through to blue to really confirm what is going on down here. No change on 5 at the moment, and certainly no change on 10. You wouldn't expect it. It's too far out anyway. And finally, just down onto the daily, you know, where is this move going to? Well, you know, we've got the VPOC here, which is hugely important, and a massive amount of resistance over here at 39.50. So any move from here, you know, on the daily chart is going to hit resistance at 3,900 for sure, whatever time frame you're trading. So you've just got to be aware of that, because remember, the slower the time frame, the greater the significance, whether that's resistance, whether it's a volume point of control, whatever it is, the slower time frame will carry far more weight. I'm just going to pass back to Anna.
Okay, welcome back. Right, I've actually still got the pound. I said we're looking at Euro Aussie, and now I'm back on the pound Aussie for a couple of 2 or 3 little lessons actually. David was saying that there is more risk in joining a trend that is underway. It's not impossible, but there are certain factors that you have to consider. And the pound Aussie was just a really nice example of such a situation. And if we go to the 5-minute chart for the pound Aussie, and again, funnily enough, again these three, the third level again, the R3 and the S3, there are 6 levels that are calculated for you on the Camarilla indicator. When people use Camarilla, they just stick to 4. We've actually added an extra 2 for a number. We just wanted more levels. So you can, if I scrunch them up here. Now, these are the daily ones, and obviously the price action this morning was quite, I wouldn't say extreme, but it was very strong. So all these levels have now been taken out, and they will be recalculated at the rollover tonight. So what we then do is we then bring the hourly ones into play as we have here, and it's really nice. This is played out in just the way that I was hoping it was going to play out, because I said I've got the hourly, I've got the 5-minute, and I've also got the Renko. But just to go back, this is the move from this morning. This looks like the RBA situation. As I said, it was down, up, and then it was up, and then we had the fall away. We had this really, really nice waterfall. Notice the volume is much reduced as you compare to what you see now, but you have to bear in mind that at the Europe, you know, the tail end of Asia and the beginning of Eurex, there is less participation. But when these volume paths were being created, they wouldn't have been so squashed down. They would have been, you know, you would have seen them in real time, and they would have been, you know, above average or average for that period. But as soon as you get London coming on board, where, you know, you have this massive injection of liquidity and participation and activity, this kind of, you know, they do reduce. That doesn't mean you don't interpret them in the same way. You will still see rise, you know, falling prices, rising volume. You will see all the anomalies that you would expect to see with the candles. But to go back to the initial move, so we've seen this move lower beautifully off this third level. As I said, I've looked at the hourly, but it works just as well on the faster time frame. So down it came, and this is 9:15. This is 7:15. Then it goes into a period. This is this congestion phase. Now, you've missed that. You're not at your terminal. Fine. It's not the time that you normally trade, and you see that there has been a very strong move lower. Then you notice that there has been it looks like there's a congestion coming. Maybe you think there's going to be a reversal about to happen, and this is where you've got the indicators, but you've got just your VPA. So you look at these the set of 4 candles that you have here, and you look at the volume profile underneath the candles, and this is what you're looking for all the time. You're looking for the anomalies, and by anomalies we mean that it's effort and result. There has been, you know, this is the result. This is the move in this candle, but look at the effort that has gone into it. That is not, you know, it doesn't match. It should, if that was going to go higher, it was, you know, it would be pushing higher. It hasn't. Then you also have to factor in that it is actually at the volume point of control, and this develops. This is dynamic. This is when the market is in what we call equilibrium. Trends start when the market is no longer in equilibrium, and it's also coming up to the London Open. Sometimes, you know, that 40 minutes before the London Open, you do get a bit of congestion. Market participants know London is going to come on board, so they wait to see what direction the London traders are going to take the market. But just looking at those four, so you've had this waterfall, you know, volume kind of as I said, underneath it, but even there you've got the fall in volume, but it's not what you want to see. Is you want to see all the histogram going up and up and up. It doesn't. You know, you kind of got a kind of anomaly there as well. And it's also, you look at your support and resistance. Is it actually hitting an important? This is a price-based support, so you always have to bring in these other factors as well, and you get this effort to rise, and you can think, oh, okay, well, the effort to rise hasn't happened, but it's gone into this congestion phase because London is coming on board. There's all sorts of different factors that you have to consider when this is happening. So London comes in, where are we? 1040, that's 840. So that's all out of the way. This is an interesting candle. There's an effort to rise. You've got a big spike to the top, went straight into a resistance line, bang, down it came. And then we do get a break. You can see the rise in the volume. So you could say, well, I've seen all this. I've also got the Renko. You know, is this an opportunity I could possibly take? There are traders who would just look to take a tiny amount on the out of that trend, and you might think, well, what's the point? But the point is, it depends the size of your position size. You know, if you're micro lots, no, you would say, okay, I've missed all that. We've had the congestion. I'm going to wait until it bases, until I've got some sort of solid foundation where possibly we can see a reversal. And what you need to see for the reversal, you need to see a stop at a support line, which we have here. We've got volume support. This is derived from the VPOC, and you've got price support as well. But what's interesting, I said about the hourly chart, what you also do to see whether there's any validity, having said that, that one, it didn't carry on lower. Sometimes it does. And to give you an idea of, well, if it is going to carry on lower, where's it going to go to? And this is where you look at the levels that you can see on your slower time frames. And when I looked at that price action that was developing, I looked at it on the 5-minute chart, and I thought, well, okay, if that is going to carry on, if there is an opportunity to carry on lower, where's it going to aim for? And the obvious one, most obvious, is the S4. Now, it hasn't actually got here. It doesn't mean that, it's just because it didn't get here this time, it won't do the next time. And also, there's a wick to the bottom of that candle. Can you see? So that kind of tells you, you say, do you know what? The risk on this, forget it. Let's wait for the reversal. And we can see, the Aussie is still very over extended. Now, what I've also, the chances are it is going to roll over, basically, and as it has done on, let's have a look on the 5-minute down here. And we've actually got a cross of these two lines, and a cross on the CSI tells you that there is a move underway, and it is you can consider it and possibly look for an entry. Say, yeah, you've missed a little bit of the trend, but a cross on the CSI, does actually, is also valid as well. The next question is, well, where's it going to? Well, the volume point of control is the most obvious first port of call, as it were. If we look at the that same piece of price action that we saw on the Renko, what the Renko does, it takes away all the noise, as it were, from the candles. And again, we have this, this is the clean break that we saw from the S3. Then we have where that congestion, where we had that effort to rise. Now the volume, the VPA would tell you that that wasn't going very far, but we did get a change of color from the trend dot and the trend monitor. So, you know, would you have taken it? It depends. Possibly not, because as I said, this all occurs around the you know, just before and just after the London Open, and really the rule of thumb with London is if you are on the shorter, on the faster time frames, just wait until, and sometimes you have to wait maybe 40 minutes, you know, wait till after 9 o'clock. So, you know, because of the price action, you have to put it in the context of the session that's being traded and be aware of, as I said, all these other factors that can come into play. This is the additional, this is that extra bit that you think, well, could you have taken that out? That's the primary trend lower. This is the secondary trend, and the primary trend was resumed. You know, there was a final push. You'll often find with moves is there's always one last push higher or one last push lower before you get the reversal. So that would have been too early an entry on the reversal. It then pushed lower. Then we have this, it goes back into this, into sideways basing. It has to find some support somewhere. You know, we've run out of, as I said, levels based on the daily levels as we see here, but we've got price-based levels, and we've got this really nice support platform provided by the volume point of control. Now, is that enough to, you know, to move that on further? Well, again, we just have to wait and see. It's a huge down candle that we've had today, and what we're trading is this this wick that's at the bottom of this candle, and we go to the hourly and we think, well, this is actually in a sort of trend lower, as it were. But if it's going to go higher, where's this going to go? Well, potentially it could go back and retest the S3. So possibly there's enough in there. Now, just a quick word about cross pairs. It's been a feature recently that, you know, some of the best moves have been in cross pairs, and the problem with trading cross pairs on the faster time frames is the spread. And one of our traders, one option you might consider, it may mean moving brokers, but see if brokers offer either raw spreads or zero spreads. And what happens is you basically pay a commission, a small commission, but what that means is you know, it may be a way of trading some of these pairs which may not necessarily be very, you know, as heavily traded as the majors being euro dollar, obviously dollar yen, cable, etc. But they may offer the opportunity. I mean, look, you know, we've had Aussie CAD, we've had Aussie Swiss, we've had Euro Aussie, Pound Aussie. Okay, that's one of the Euro yen and Pound yen. Just consider it. As I said, because there is a cost to trading. You know, you may think, well, I don't pay anything. Well, you do in the spread. You know, there's no such thing as a free lunch in this business. And finally, the other thing you may want to consider if you've got the CSI is if you are like I do, you tend to restrict yourselves to maybe 3 or 4 pairs rather than have all the, you know, the whole of the CSI under here. I've got the Pound Aussie. Mine are all based around the pound. So I could put the yen on here, and I will put the dollar on here, because that will tell me, you know, okay, when these lines move together in parallel, like they do here, that is telling you there is a congestion. But if I have one of the, you know, the other currencies there, I maybe have got a divergence on another pair, and it's just a quick, you know, a quick eyeball to go and see, oh, okay, well, maybe the move is happening elsewhere. So those are the 3. You've got the hour, you've got the Renko, and you've got the 5 minutes as well. Let me just put I haven't put the VPOC on here. Maybe I should. Let's have a look. Have a look there. Have a look and see what happens. Where are we? No, that's way back up here. You can see this massive congestion for the Pound Aussie. That was yesterday, and that's, as we said, this is not. Let's have a look. Let's take the euro off. Let's put the Aussie on here. Hold on a minute. there we are. Yeah, they're kind of moving in they're moving in parallel, and that also tells you there isn't really a trade to be taken. Now, what's interesting, I said I was aiming for the S4. Had I had the VPOC on here, and I think I better keep it on here now, that tells me that's where it stopped. The volume support actually came in, so it's levels and flow. The levels will tell you, you know, where you're going to get a potential reversal. Also, where the price is probably aiming. You can then decide, is it worth taking? You know, is the risk worth taking? Because I think this is going to get there. That's a decision only you can make. Okay, right, we're going to stop there. Anything else you want to say, David? Or is that it? We're actually going to stop literally. We're not going to turn off. We're just going to stop just for 5 minutes while we have a drink, and we're going to carry on looking at, let's have a look at the indices, which are all, I mean, flat is an understatement. I mean, there is no volatility at the moment. We haven't talked about volatility, and we need to talk about volatility. We look at the VIX, it's at 15. There's an awful lot of complacency. I don't think anyone can remember the amount of complacency that is in the market at the moment. Now, what are you saying? Well, why am I looking at the VIX, and why is it having an effect on I'm trading Forex? Because if the market generally is drained of volatility, in other words, it's just flat, it's really not going very well, it affects everything. And you're in a scenario that is actually more risky from all sorts of points of view. One of them is you get bored, and you know, there's a lot of congestion. Congestion can be more risk, because any breakaway is not really going to go very far because you have no volatility. Now, extreme volatility is just as bad, but at least you've got to move. And what this is telling us is there is no volatility at the moment, or very, very little. This morning was a godsend, because, as I said, the RBA, you will get these events which will, you know, help to push the price one way or another, but it's something to be aware of, and something we're going to talk about in the next sort of topic. So I'm going to stop now for a second. So the Nasdaq that is the daily chart for the Nasdaq. I don't know how a Nasdaq trader is supposed to trade that. This is, you know, it's a razor blade there up to 13, and we've got the small caps. The small caps are broadly sideways with a sort of bit of a bearish bias. So anyway, I'm going to stop now, but as I said, you're more than welcome to stay. I know we've got other people joining us, and we'll be back in about 5 minutes.
Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got two versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView, because as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out. You never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.